Do you want to learn a super simple reversal trading strategy that even your 6-year-old nephew could understand? It's called the one-day reversal strategy by the legendary trader Jesse Livermore. Jesse Livermore was a famous stock trader who made a massive 100 million profit in a single trade. So, let's dive into the one-day reversal strategy. It's so easy that all you have to do is analyze price action and volume in a daily time frame. Simple, right? Let's break down the steps for you. And make sure you stick around till the end because we'll share a few extra tips that can significantly increase the win rate and profitability of this strategy. Step 1. Identify a strong trend. Look for a stock that has been trending strongly in one direction for a while. It could be an uptrend with higher highs and higher lows, or a downtrend with lower highs and lower lows. For this example, let's focus on a downtrend. But remember, everything is the same, just inverse for an uptrend. Now, it's important to note that we're not trading against the trend here. Many new traders lose money because they try to predict reversals without any evidence. Instead, we're going to wait for confirmation signals. Step 2. Find a favorable entry position in the daily time frame. Look for the low of the current candlestick. It's favorable if it falls below the low of the previous candlestick. Then, wait for the closing price. It must be higher than the closing price of the previous candlestick to confirm a favorable entry. Step 3. Observe the volume. Volume serves as a confirmation in this strategy. The total volume of the current day must be higher than the previous day. High volume indicates increased participation to reverse the ongoing trend and confirms the strength of the reversal. Step 4. Set stop loss and take profit points to limit potential losses if the trade goes against you. Set a stop loss order slightly below the low of the previous day. Additionally, set a take profit level using previous support or resistance levels. You can also utilize Fibonacci retracement levels as references. Just make sure the risk-reward ratio fits your trading style before placing your order. And remember, don't enter a trade if the setup isn't favorable for you. Step 5. Find a favorable exit. Apart from exiting with profit points, Jesse suggests looking at the high of the current candlestick. If it's above the high of the previous candlestick, and the closing price is below the close of the previous candlestick, it may signal another reversal pattern and again, the total volume of the current candlestick must be higher than the previous day to confirm a strong reversal tendency. Now, here are 3 extra tips to increase the win rate and profitability of this strategy. Tip number 1. Use the trade dots indicator for confirmation. This indicator labels reversal points on charts by analyzing the price action of the asset. If the current candlestick shows a trade dots label, it's more confident to confirm it as a reversal point. You can try the trade dots indicator for free. Check out the link in the bio. Tip number 2. Don't overtrade and be patient. Don't trade just because you feel there's a potential trend reversal. Always wait for the signal to be confirmed. Rushing into a trade driven by emotions can expose you to high risk. Tip number 3. Manage your risk. Only risk a small amount of money on each trade if you're trading derivatives. Don't hold over 2% of your overall portfolio in each position. And never bet or speculate on market news. Becoming a smart and profitable trader takes effort and time. So don't skip the tedious steps that separate winning traders from losing ones. Remember, the one-day reversal trading strategy isn't foolproof. Always control your risk and use stop loss and take profit with discipline. Journal your trades and backtest your strategy on different assets. Give this strategy a try on your favorite trading pair, and let us know how it performs. Until then, see you in the next one.